Hey guys, good morning, welcome to another live session of Stocksnipertrading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra low commission, which starts at 99 cents per lot. Our accounts spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HMC Greece, compliant with ESMA, EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AFX, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips, and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.
Recording in progress.
Hey everybody, welcome to Stocksnipertrading. My name is Ron. My partner's Dave. I appreciate all of you guys joining. It's almost 7:30 a.m. Eastern, and it is Monday, August 21st. So thank you everyone for joining. I appreciate everyone on Zoom. Thank you. Vic, yeah, I can't wait for Jamaica. Thank you. SSDN, thank you for joining. Russell, Miguel, thank you guys. I appreciate all of you guys for joining. Everyone on YouTube, thank you guys as well for joining. We appreciate you guys as well. Okay, so the plan for today is we're going to go from 7:30 till 10 o'clock a.m. Eastern. We're going to be looking at gold going into COMEX, and then we'll switch over and we'll look at US 30 and NASDAQ going into Wall Street Market Open. Before we get started and do anything, I hope everybody had a great weekend, spending time with your family and friends. Also reviewing a little bit, maybe you went over your journal, you saw how you guys were trading the week prior, maybe made some improvements. That's what trading is. It's always an ongoing process of always improving yourself every single week. You're never going to be a perfect trader. There isn't any perfect traders that exist, but as long as you're just improving daily, whether it's you're learning new concepts, you're learning new strategies, you're improving your psychology, you're improving your risk management. There's a lot of improvements that can be made before you even make any money in the markets, but that's a positive. Okay, so don't always look at how much money you're making and always guide your progress with just how much money you're making in the markets. Also, did you learn anything new from last week that you can apply to the markets this week, and then just keep improving yourself? So with that being said, I just want to before we even look at any charts, guys, it's the beginning of the week. I just spoke with everyone on Zoom. Mondays and Fridays are traditional tough days to trade for most retail traders because not just the volume in the market, it's just coming off of a weekend. It's just you want to get right into the markets. You're excited. You might over leverage a little bit early in the week, and that might affect the way how you trade tomorrow and the rest of the week. And then also when we go into Friday, a lot of traders over leverage, do too much on a Friday because they want to make some extra money for the weekend, and that's could be the pitfall which causes them to lose, and then you have to go through that cycle again of going through losses, going through a weekend, and then starting this process all over again. So I've been through it. You guys have been through it. We've all been through it. So let's try to start to avoid that as much as possible. Okay. And what we're going to look at right now is I just want to go over something on right over here. So just for everybody, okay, just to get everybody started for the week, 7 tips to prepare for the week. So I'm just going to go over these 7 tips to help prepare you for the week. Number 1, review your past trades. Okay, so hopefully some of you guys are getting better at doing this. You review your profitable trades, but more importantly, you review your losses. Take the time to review your losses. It's not always just trade. For every hour that you spend trading, maybe spend 30 minutes reviewing what you did to help you improve. Okay, it doesn't matter if you just keep trading. If you keep making the same mistakes, you're probably going to continue to lose money in the market. So take some time to review your past trades. Whether it's right after you take a trade and you step out of the market, review. If it's after your session, take some time to review. If it's a weekend, a couple hours, take some time to review your trades. So reflect on your previous week's trades and evaluate their outcomes. Identify any patterns, mistakes, or successes. Learn from past experiences and use them as lessons to improve your future decision making. Number 2, stay updated with news and events. Keep track of upcoming economic releases, corporate earnings reports, central bank announcements, and other news that can impact the markets. Economic calendars can help stay organized and aware of potential market moving events. We'll be looking at Forex Factory. We'll go through the entire week so we know which days are going to be more heavier with economic news than other days, and what time of the day we should be focusing on for volatility. So hopefully some of you guys are already prepared. You guys did that. Number 3, conduct market analysis. Analyze the charts, indicators, and relevant data for the financial instruments you trade. So this is what we're talking about, to get to know the instrument that you particularly trade, whether it's gold, whether it's oil, whether it's US 30, whether it's NASDAQ, whether it's S&P, whatever it is. Make sure you understand the financial instrument that you trade. Utilize technical analysis to identify trends, support and resistance levels, and potential entry and exit points. Consider applying fundamental analysis to gain insights into broader market conditions. 4, set goals and create a trading plan. You should already have a daily goal set. You should also have a weekly goal. When you hit that, then maybe you're happy, and then you can exit the markets knowing that you've hit your weekly goal, and then you don't even need to continue trading to jeopardize that. You can just go on with the rest of your week, and you've hit your daily goal. Treat trading as if it's a business and not a casino, and that might help you last longer than most retail traders who do not have a trading plan. So set goals and create a trading plan. That's what we're going to talk about in our webinar this week. Will be how to develop maybe a trading plan, or improving a playbook on your trading. Define your trading objectives for the week. This starts today or yesterday. Start defining what you want to get out of this week, how many days you're going to trade, which day will be maybe your bigger trading day, which ones will be your light days. For me, normally Mondays are my light days in trading. I like to trade Tuesday, Wednesday, Thursdays, and then I go into Friday, seeing how the markets are moving. Whether it's a specific profit target, risk management goals, or trade execution strategies, create a trading plan that outlines your approach, including entry and exit criteria, risk reward ratios, and position sizing. So these are all different. These are all individual for every trader. My entries and exits are probably different than yours. My risk reward ratio is probably different than yours. And my position sizing is probably different than yours. But yours are probably different than other people. So this is not a competition of who can trade with bigger position sizing. This isn't a competition who can enter and exit faster. This isn't a competition of you have a better risk reward than me. It's improving yourself as a trader is what trading is. This is a self improvement. As long as you are improving your personal trading, because everybody's at different levels, so you have to understand where you are and how to improve yourself. Okay. And number 5, plan for risk management. Determine your risk tolerance and ensure that your trading plan incorporates proper risk management techniques. Right now, starting today, starting this week, how much are you willing to risk of your entire account to trading? I personally always go with a benchmark of 1% risk of your entire account for one day maximum, and you don't need to risk that 1% all in one trade and go all in that 1%. You can break that 1% down. For example, if you take maybe 5 trades a day, maybe of that 1% you're allocating 0.2%. Multiplied by 5 is your 1%. So now you can do 5 proper risk trades and gauge how you're doing from there. And then how much are you willing to allocate for the entire week, month, and things like that. You can look longer term. But starting off with a risk management plan, you should be doing this at all levels. If you just started trading today, today's your first day in the markets, I would recommend right now developing a risk management plan. This might save you months and years of headaches that some of us have gone through, because when we started, we didn't understand what risk management was when we started trading. So now please take the time to understand that this is very important in trading. Okay, if you want to do this consistently, daily, over time, risk management is probably the most important thing before you even learn what a candlestick is. Set appropriate stop loss orders, calculate position sizes based on your risk tolerance, and consider diversifying your portfolio if you're more in the equities market. Take note of support and resistance levels. Okay, we're going to do that like with a top-down analysis. You figure out where your key levels are. Identify these support resistance levels for the instruments that you particularly trade. Okay, these levels can serve as potential areas for entering and exiting trades or adjusting stop-loss orders. And finally, stay disciplined and manage your emotions. When you trade with proper risk management, it's easy to control your emotions. You're not panicking, you're not getting scared while you're in a trade, because you're trading with the proper allocated risk. So then you can actually concentrate on the trade at hand. You can focus on what's going on in the market, as opposed to just panicking and looking at your MT4 and making irrational decisions. So managing your emotions is probably one of the hardest things to do as a retail trader. But once you learn this skill, I can probably guarantee 99.9% that your trading will start to improve once you start to control your emotions. And everybody can do it. It's just a lot of traders just over leverage, and then they can't control their emotions. And it's very simple. Just lower your leverage. That's all. Trading requires discipline and the ability to manage emotions. Remind yourself to stick to your trading plan and avoid impulsive decisions driven by fear or greed. Emotions can cloud judgment, so maintain discipline is crucial. Okay, so that's just a little I want to start like the weeks and days with a little inspiration for everybody to help. Now we're going to move over to our Forex Factory. We're going to look at our folders, what we have going on this week. Thank you everyone for joining on YouTube. Appreciate you guys. If you guys can hit the like button, subscribe to our channel. If you guys get value out of our stream, then we do appreciate the likes. Thank you guys. Okay, so today, very light day according to Forex Factory. And again, if you guys use different fundamental news or economic news, if you guys use FX Street, investors.com, Bloomberg, there's various different ones, Financial Juice. What we're using is Forex Factory, and it is very light today. Okay, there was very light European news, and we just have one Canadian folder. So we don't have any high impact red folders with USD. So it's going to be just a normal Monday. It might be a sideways Monday. We'll see what happens. Start of the week, but not too much volatility. Let's look into Tuesday. Tuesday, if you're trading the European session, okay, this is important. Day 1 of the BRICS summit. So BRICS is our Brazil, Russia, India, China, South Africa summit. that's being held right now. Okay, so that may affect the US dollar with whatever comes out of this summit, and this is day one. Okay, so this will be ongoing, and then we have some 10 a.m. Wall Street news later on, existing home sales in the US. We've got some speakers, FOMC speakers, speaking tomorrow afternoon, 2:30 p.m. Eastern. We have Goolsbee, we have Bowman, and speaking about FOMC. And then also this week, we're going to go into the Jackson Hole Summit. So we've got a busy day tomorrow, but BRICS Summit is very important, and Jackson Hole this week, what I'm going to show you right now as we get into going into Wednesday, Thursday, and Friday. Wednesday, okay, look at a lot of red folders. Okay, so this is where we're going to get volatility starting in London, 3:15 a.m. Eastern. Look at all the European red high impact, moderate impact folders. You have a lot of French manufacturing, German manufacturing. We have the BRICS Summit going on, day 2. So this is where we're going to start to get some volatility midweek, Wednesday, and it's going to go through 4:30 a.m. We got some British flash manufacturing, so all throughout Europe. And then we get into Wall Street, 9:45 a.m. Eastern, and then we have some U.S. flash manufacturing. So Wednesday is going to be a very volatile time in the market. So right now, knowing this, you should be cautious trading on Wednesday, especially if you're trading in London and going into New York. Thursday, what do we have going on Thursday? Again, day 3 of the BRICS Summit all week, and we have USD unemployment claims, which are released every single Thursday. It's week over week, so we see our unemployment numbers from the previous Thursday at 8:30 a.m. Eastern. And we have FOMC speakers. This is day 1 of what I was just talking about, the Jackson Hole Symposium. So if some of you guys don't know what the Jackson Hole Symposium is, it's a Federal Reserve Bank of Kansas City, and the Economic Policy Symposium held in Jackson Hole, Wyoming, is attended by central bankers, finance ministers, academics, and financial market participants from around the world. The meetings are closed to the press, but officials usually talk with reporters throughout the day. Comments and speeches from central bankers and other influential officials can create significant market volatility. So this, unfortunately, reporters can't be in there, but we'll hear what they say coming out of there and things like that. But this will affect the markets, so careful with this Jackson Hole. It's all of our FOMC speakers and all the smart people talking about interest rates and inflation and things like that throughout the week. And then we go into Friday, and Friday we've got some German, if you're trading anything here, some FOMC speakers throughout the week. Always 10 a.m. Friday, we have this revised University of Michigan Consumer Report. And then be careful here, guys, okay? Make sure you highlight this so you guys know. If you're trading Friday, 10:05 a.m. Eastern, right after Wall Street Open, Fed Chair Powell speaks right there. And day 2 of Jackson Hole Symposium. And then we have at 3 p.m. that afternoon, Power Hour on Friday, ECB, the English Central Bank, President Lagarde speaks. So make sure you're aware here. So there's no surprises on Friday. If there's a lot of volatility, we have Papa Powell speaking on Friday at 10:05. Okay, so that's just some news going on this week. You can see which days are more important than other days. So just preparing yourself for the week. Okay, so what we're going to do is we're going to get started. It's almost 7:45. We're gonna start to do some top-down analysis on gold. Over here, this is Bookmap. This is a live liquidity feed of the futures market. We're looking at gold over here. Above us are our offers. Below us are our bids. These bubbles over here are the current transactions, market executions in the market. These are all pending orders in the market. This is a heat map that shows where there is some heat. Heat also is liquidity in the market, and liquidity can be of all sorts. So if it's up here, it's showing offers, it's showing liquidity up here, but this can be sell stops, sell limits, buy stops, buy limits, stop loss orders. It's all pending orders in the market, and we try to decipher what these transactions are with this indicator over here, CVD, cumulative volume delta. Right now it's negative 182, so it's just a current reading of the time slices that we have here, and I have it on 15-minute time slices. So you can see this is all the aggregated volume from this vertical dotted line to the next vertical dotted line, and they're in 15-minute time slices. So over here is 7 a.m. Eastern, 7:15, 7:30, and then we got our new one coming up in just a couple minutes at 7:45. So you can see that the buyers, the volume of gold, is continuing to populate the depth of market below us, and we're taking out more offers above us. Okay guys, so let's take a look. How many of you guys are in any trades right now? How are you guys doing? How was your week last week? I hope you guys enjoyed the UFC. If you guys watched that, wow, Sugar Sean, I didn't think he was gonna do that. That knockout was unbelievable. If you guys watch UFC, if you guys watch Messi, the guy is unbelievable again. Can't stop what he's doing. If you guys do watch sports, okay, so let's get started with gold. If you are in any trades right now, we are pushing up currently. Okay, we sent out, there was a gold signal sent out at, I'll go over all of this, but on our SST Scalper Pro, there was a gold signal sent out at approximately 1890, and it's running 25 pips right now, if you guys took it, yeah. So what we're going to do is we're going to start off with the daily. So quick little top-down analysis. If you guys are in any trades right now, please guys, if you can watch your own trades, manage them to the best of your ability. But right now you see that the buyers are really pushing through all of these offers on gold. That's why we're getting that nice little push on the lower time frames. If we look on the daily, okay, we have this daily downtrend. These are daily candles, individual candles that started trading mid-July, August. Gold has been on a little bit of a pullback here, making lower lows, lower highs, lower lows. Every bullish day is coming up and then again push right back down. And then we start to see this critical level of support that broke 1907 area, and the volume closed below. So we could consolidate down here. Gold might make a little move up, a little pullback move coming up, or it could continue to maybe just consolidate, bear flag, and we're continuing to push down into these levels. So it's going to be interesting if you do trade gold, where it will be moving in the next few weeks. And we also have to monitor how the US dollar is doing as well. It's at some critical levels as well. So just following from last week, here's Monday, bearish day. Tuesday we pulled back, lower high, new lower low, close down here. We go into midweek Wednesday, open up bullish, come back up, lower high, push it down. We take out the previous low, we close near the low. Thursday we open up bullish, come all the way back up. Again, selling pressure is very aggressive on gold. They continue to exhaust the buyers, break new lows, close it down here. And then we get Friday. Friday was a little bit of indecision in the market. Again, the buyers pushed it back up to 1896.97, and then they pushed it right back down where it closed right here. Now going into today, where did we open? We opened exactly where we kind of closed on Friday. So I'm just going to place a yellow line right at the critical level, like right here. That's where we opened, yellow line on the daily. And I'm also going to locate our high and low. So we opened and we came down bearish. What happened down here? Equal lows at 1885. So I'm going to place a purple line. Okay, so even when we're trading 1 minute and 5 minute candles or 15s, you can see that they make equal lows. You can also see that daily candles also make equal lows. So we have no new lower lows in the market, and that helps with psychology. Like the sellers did not have enough pressure to push the market down for a new low. It was saved right there, and it's an equal low. So it's considered to be semi-bullish, that they held the support without breaking a new lower low. It's for psychology as well. Buyers are holding it right here without breaking a new low. If they break it, then you can give a little bit edge to the sellers. But it held right there. So there is a little bit of support level being created at 1885. So if we draw this box going across this week, this may play a factor and may be a static zone. If we ever do come back down to 1885, we'll see if we can continue to hold. Maybe if it pulls back, we'll see if we start building a higher low at 1887 or 1889 and see if it can hold. Maybe we get more daily buyers interested in gold and then start to put some volume in the market to reverse it back up. If we come back down to 1885 and sellers break this, then we'll see if it closes below and continue to push down. But this is one area of support that we've already identified in the market. And when we came down here, then we just came right back to where we opened, and gold continued to push up to our high of the day, which is approximately 1895 is our high of the day, 1894.30. Okay, I might be off by a little bit here, but we're just looking for an approximate level. And it's also lower than Friday, which is lower, lower, lower. So sellers are still in control on a higher time frame. And then when we hit our high of the day, it pushed right down here where we're at 1892. Okay, so going forward, if we continue to maybe catch some bids, populate and come back up to the high of the day and we break out a little bit, where could we move? Okay, maybe 1896, but let's see if we can push maybe a little higher and maybe get it up to 1900, 1901, maybe that psychological 1900 level, body, that wick that came up there. Let's make it into a yellow line and see maybe we can get up there. If the buyers can start to maybe put some volume in the market. Also this area right here too. Okay, so you can see 1896.97 is still a critical level in the market where it came up on Friday. We got rejected there, and it's also holding the low of Tuesday, so that is a critical level also in the market. Maybe if we have an impulse break on the daily, it might come up to previous high, and we'll see if it's an equal high or if the buyers can push it a little further. Above us at 1900, that's where maybe we got to know that there is still lots of resistance in the market, holding the market down at that psychological block 1900. So I'm just going to place like a red box above there just in case the volume does get up there. If it starts pushing up this week, maybe we have to know that it could just pull back and sellers could come right back in control and push it right back down. So this also a psychological block in the market, 1900, that we should be aware of. And then maybe if buyers can push it through there, then back to 1907, and we can judge where we go from there. So right back up to this level. So just to reiterate, gold has been bearish. You can clearly see where we're coming down from. There was a lot of attempts of buyers to push up. They got pushed down. Same with Friday. They pushed up, pushed down. Today, equal lows on the bottom, and now we're coming right back up. Okay, we might also consolidate in here for a little bit, and then we'll see if buyers can control it back up here or sellers are going to push it and break below here. If we break this critical level down here, let's look to the left. So if we bring this box over here, what do we have below 1885.82? We've got critical level right there in the market, 1877.76 area, right in here where those bodies are. I could lower it even a little further, and then right there I get these bodies, I get those bodies, 1875, nice whole number. And then if you want to look halfway below the green box to the yellow line, I could place a line like right in there at 1879 or 1880 if I want to be around there, just in case there's an impulse break down here and it goes right back up. So I could have a yellow line like right here at 1879.50 or 1880 right in there. We don't need to worry down here right now because we have to physically break this green box in order to come down any lower. So if it does start to break, then we can come back down and look below here. Right now we don't need to worry about that because the volume is up here currently. So let's go to, now what I'm going to do is I'm going to break this daily candle down into an hourly. So I'm going to start to dissect the daily, and this is how the daily candle is moving on the hourly. So you can see the hourly move, lower lows, lower highs, new lower low, another lower high, new lower low, lower high, but it's not creating any more lower lows. You can see there's the double bottom right here and right here. When did this move happen? Let's take a look specifically what time this was. Okay, so 2100, it pushed down bearish. Over here, this is the futures market, 2200, and then push back up, and then we go into coming into midnight, and then 1 a.m. push it down. Now we're starting to get into pre-London, 2 a.m. Here's London, real consolidated for gold, 4 a.m., 5 a.m., and then 6, it comes all the way back down to this level, pick up the liquidity, and now we're pushing on this strong 7 a.m. hourly candle going into COMEX. Where do we have our hourly resistance? You can see like over here below the purple line, we've had those 2 impulse breaks, nothing closed above. We had how many impulse breaks? 1, 2, 3, 4, 5 above that purple line, nothing closed above. If I bring this across as well, we came into there. 1 time, 2 time, 3 times, no volume on the hourly close above that purple line. So if I bring this red box across, I see that we might maybe come back into there, and maybe they'll push down. But if we come up today and we start to close with hourly volume above here, and we use this 1894, 1895 area as a good support line, then maybe we're going to have momentum to push up to 1900. But right there is our hourly acting resistance in the market. We're starting to develop a little bit of support below us. Right below here, I can start to see like these bodies, those wicks right there, where came in, back up, came in, back up, came in, back up. So I'm going to flip that to a green box and bring this continuing across. And you can see today, we also came in here, did not break. 6 a.m. they came down, broke it, but came right back in. So if I extend this green box across, I start to see where our hourly resistance is, hourly support. This is the bigger zone on a higher time frame, but we may consolidate in here. We're going to look to see if we can break out of here and come up, continue up bullish. It might come over here to the yellow line, just like this, breakout, and then get rejected and push right back down. It could come up today, up here, and push right back down. But we want to see if hourly volume can close above this red box, above this green purple line today, to see if we can build this as support. Maybe gold can maybe rally today a little bit bullish back up to 1900, and we see what happens up there. If we're looking to the left of the chart, obviously, hopefully everybody can see that we are trending down. Like even if you just draw a trend line from here, there, continue push it down. We are trending down. Like you can see, it came up to the trend line, push down, 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 came up to the trend line, push down. We're right at the trend line. So this is why gold is at a very critical area. We might break and close above that trend line, but this resistance, hopefully we can break and maybe be bullish up there for gold buyers. Any sells on gold, I would look below this area, like 1885 down below here, if it's going to continue to sell off. But maybe we have a little bit of a bullish recovery today. Let's go into the 5 minutes. Okay, so big drop over here. This is like pre-London, 1 o'clock, 2 a.m. Then pre-London comes back up, gets really choppy in London for gold. But now you can see, maybe if you learn how to avoid this type of trading, things start to get much better. Look how much cleaner it's trading right now. We got nice full body candles. Some of you guys are in buys right now. So I just want to look at the gold setup here on our Discord. Okay, so there was a gold buy at 715 at 1889.50. Okay, set up like this, and now it's pushing plus 20 plus pips. So if we go back to look at it, 1889.50 is right around this area right here. So this daily area that we just started to push above, we just sent out a signal, and it's running right up still. Could be forming a nice little bull flag, maybe coming up to this red box, and here's that trend line that it is holding currently. So any pullbacks now, where did we have some sort of resistance in the market? Over here, resistance, turn to support over here, If we continue to bring this across, it turns into resistance again and push down. If we bring this across, then maybe now it's going to start to act as a support level right here. So remember, this was the hourly down here. This was the bigger block of support. Now we have a short-term support level being created. So we're going to see, can the buyers do something at the high of the day up here and continue to push it out? If we have maybe an impulse break out of the market, maybe our previous high is right here, maybe it could get up there and we test this level up here. Okay, and we also have, in a minute, we have a new hourly candle opening the market at 8 a.m. So this might affect the market, bring in some different momentum in the market. If you take a look at that hourly candle, what we were just analyzing, we have a strong hourly candle that opened, came down, higher low from the previous hour, holding this block and continued to push up. We took out the previous high and now it's pushing where it impulsively broke above that trend line, now coming right down here. So we're going to see where we can close in the next 40 seconds, sorry, and we're going to see how we open the next hour and to see if we can break out of this high of the day. These areas you can extend across in case there's a pullback coming down to 1890 to see if it will hold this area, and that's roughly 50% of the volume. Open, if we're closing here, that's maybe roughly half of it. But right now we're getting a nice little momentum push on the close of the hour. Nice big candle. Let's add some EMAs on our charts. Okay, so we'll add the 9. We are above the 9. We'll add the 200 EMA and we're above the 200. There was also a golden cross at 7:35 a.m. Eastern where the market is rotating bullish. Now we opened, ignited, short wick, pop right into the red box, and that is our gold high of the day right up there, 1894 and a quarter. Right up there. So we're going to see how it will react when it gets up there. If you look at your RSI indicator, it is getting a little bit overbought at 75 on the 5 minutes, but it could continue to maybe squeeze through here. This is where maybe it could push down a little bit, maybe get rejected in this red box and cool down a little bit. Okay, so what we can watch going into COMEX is looking at this big candle that created this move. I'd like to see maybe how we're going to consolidate inside here. Okay, holding above here. We've got a nice bullish push continuing to break out of here. Okay, look at the buyers, nice strong control. Look at how we flipped CVD. Okay, remember it was negative down in here. Now we just flipped above the 0. That's like where the market has a little bit of equilibrium, it's balanced, and now we've pushed it up where now the CVD is 130 positive. So it shows a lot of these transactions where a lot of buy limits, buy stops, maybe hit some stop loss orders below us, and taking out stop losses above us. So we're pushing. We're going to see if we can take out that high of the day. The high of the day is that purple line up there. Okay, so if you guys are in buys, if you guys took buys down in here, if you guys followed the SST Scalper Pro signal, I would highly recommend that you're at least at a break even right now. Maybe have a trailing stop loss in profit, because that was 1889.50 down in here. So if you just measure the move from 1889.50 to where we're at, okay, it's almost 45 pips. So make sure, please guys, if you can in the Zoom, if you guys are monitoring this, have a trailing stop loss coming up, secure some profit on a Monday. Okay, so we're going to watch this, how it trades into COMEX. Right now, buyers are in control. Okay, so look at the squeeze. This is where like you don't look at this indicator, okay, where I was just saying it's at 75. That doesn't mean that you just hit the sell button because RSI is telling you it's overbought. This is where buyers could really squeeze the sellers in there, and that's what's happening right now. So it's difficult if you want to sell that. Like, that's a big candle. Okay, it just moved about almost 20 pips. So you could be in drawdown selling this thing right now. You got to make sure like at least some sort of structure starts to break in order to have it push down. There's a lot of traders that just want to sell a single candle that gets overbought for a pullback. You might have to pip, you might have to dip, or don't even sell it until we start to see some structure breaking. Look at this. How do you sell this candle? It's like an ignited open with a short wick and pops. Very difficult to sell that candle. We have a new high of the day pushing out. This is the continuation from our new hourly open. Look at how we closed on our hourly candle, closed right at the high. Look, it's ignited. There's no wick. So it's pushing, it's filling up the hourly wicks to the left, and we're pushing up to this area that I marked on the chart to see if maybe we can hit up here. And that's where maybe it could get pushed down right up to this red box where it just came up to. And I was looking to the left of the chart over here where there was a little bit of structure in the market right over in this area where it just basically almost came up to right up there. Now it got pushed down. So where will it close? There's the purple high. So we just made a new high of the day. Now where will it close? If we're positioning ourselves for maybe a sell, maybe you're looking for a sell below this box down in here, to maybe take a sell. Maybe you can get a little bit more aggressive down in there for catching a sell on gold. But we're going into COMEX market very, very soon. So we will still continue to wait for it. Yeah, so on our signals, okay, so SST's right here, Scalper Pro, gold buy, we had it right here, 715 coming out. This is how we send our signals, just for everybody to get used to it. 1889.50, suggested TP 1899.50s, depending on how long you want to be in the trade. Suggested stop loss 1884, so you're risking 50 pips. So you got to allocate your risk how you want to do that. These are just suggestions. Some traders don't do what we say. They do their own thing, and that's fine. But just as long as you have your proper risk management. And then we updates trade management at 20 pips plus, secure 25%, leave the remaining 75%, run with stop loss or break even. We try to suggest how to trade these with some trade management, just in case you forget and things like that. Here's where it's updated, 40 plus pips, and it's running just like what we see on right here. Okay, so this started, I'll put it over here, this started at 1889.50, like right here. So if you're in the buy, guys, and then like how much risk below the previous structure, like 1885, where we're kind of down there. So you are risking a little bit, but our TAR, risk to reward, in this particular situation is pretty good. Now what you can do is to lower your risk. If your stop loss was down there, start to lower your risk and eventually get it to a break even, hopefully. And you're up approximately, what is it, 50 plus pips? 60 almost, okay. Okay, so look at now, cumulative volume delta. Did you see how that flipped? The depth of market really flipped with a lot of buying volume. We're 13 minutes away from COMEX market open, the commodities exchange. So we'll see how we open there. Now we're starting to get rejected a little bit. Okay, you can see the RSI now is at 78. So maybe there's going to be a little bit of a relief coming down. There's going to be a little bit of a push down. We'll see maybe, is there going to be like maybe a double top going into COMEX something like this, then maybe it pushes down into here. There's various things. It might just cool off right here and continue pushing in COMEX market. But what we have to do is, with the volume closing above this red box now, is let's go through the motions and flip it green to see if it will hold as support going forward. So it just came in, caught a wick, and we're coming right up here. This was the high of the day. There's the purple line. We're right there again. So this is where the market is kind of consolidating now at that high of the day, maybe inside here. Okay, hey guys in Zoom, did you guys take that gold buy? Pretty nice way to start the day. Good job, guys. Good job, Ross. Andrew, you missed it? No problem. There'll be another ones. Yeah, it was an excellent call. Excellent. Okay. But let's take a look now, like review. Review is always good to do too. Now, after the fact, okay? So some of you guys took it, some didn't. But kind of, you have this support area. It broke down here at 615, new lower low. But we also have divergence on the 5 minutes, bullish divergence with this RSI indicator. So when it took out this low right here, we had a previous low on the RSI, and the next one was higher. So the strength is increasing while the price dropped. So maybe they came down to pick up liquidity down here as the strength increased. Then we had this nice push out of here on the 5 minutes. So there's a nice bullish divergence to add to some confluence. If you use these indicators too, now you have where a golden cross plays out, where the 9 EMA or any shorter time EMA that you use crossed above a higher time frame EMA. It's not just the 9-200 is the golden cross. It can be the 9 crossing over the 21. It could be 9 crossing over the 50. It could be 21 crossing over the 100. Just a lower time frame EMA is crossing above a higher time frame is what's considered the golden cross, and you had that right there. So when you look at it now, there's multiple things that are leading into this nice strong move on gold. Pedro, you only got 24 pips. I don't talk like that, okay? I don't just say I only got. You should be blessed that you got 24, 25 pips out of a trade, so, and then you can improve on things going forward. But sometimes I only get 10, 15, 20 pips out of a trade, so I don't look at it as just only. I look at it as it's going towards your profit for the day. And then things like that, how can you improve on maybe getting more than 24 pips? How could you have held it a little longer and things like that? But don't be so hard on yourself that you only got, because that might affect your next trade and things like that. So always try and be positive, guys, not just for you, but for everybody here. Always look at the positives about trading. Stop just making a good trade into a negative, because that's the wrong mindset. You're always going to just then do that. You're always going to criticize yourself. Even when you make profitable trades, then you're always going to be negative, and that's going to come back and haunt you down the road. Always just be positive, be humble. You got 24 pips out of the market, and let's try and get another 24 pips on another trade, and that could be your 50 pips for the day. But I would love to start my day with 24 pips in the bank, especially starting the week, Monday. Do I think it's going to go higher than COMEX market open? I don't know. Why don't we let the volume decide for us instead of us making assumptions? Because my assumption is just as good as yours. So it's just, we'll see what happens when the COMEX market opens up in about 7 more minutes. Okay, so we're starting to get now no new higher highs. Okay, remember what we were talking about, the equal lows. Okay, when we started the call, we were talking about that. But what about on the opposite side? There's no new higher highs. They're kind of equal highs. This one might be a little bit lower than, but right now it's kind of consolidating here. Maybe for COMEX market open, we could maybe potentially look to sell the market below here. But you have to be careful about pullbacks that come into bids. Like what could happen is it comes down, but remember, we have bids accumulating and it might come up and do something like that. Okay, so if you're selling, you have to be careful. Like it might be could be a quick drop and go right back up, because remember, we have a lot of bids below us. They're accumulating. So if you are selling the market, you are countering the bullish move. So one leg that comes down, it could, but then it could come right into a pocket of bids and go right back up. So some traders wait for more confirmation. They wait for maybe if it comes down, then it goes back up, then they look for like a lower high and then to sell it again, maybe close below there. We flip this green box red and then it continues to push down. So there is that too. But remember, if you're counter trading, like right here, these red candles counter traded and continue to get squeezed. But right now, maybe with COMEX, with a bigger market exchange opening up, maybe they're going to start to push gold back down. But it might come down to a level where there is good support and bids waiting, and then bring it right back up. Okay, so I don't like to trade right into COMEX market open. So I'm going to wait it out 5 more minutes. And we'll see how we move. Okay, so just going forward, make sure everybody, please, if you're not in a trade right now, you look at your MT4. Okay, get in the process of doing this. Look at your MT4. What are your spreads on gold right now? Make sure you have the appropriate lot size for your account in there. Make sure you're not using a different lot size that you're using for a different security, and now you're coming to gold. And just these mental errors. I'm trying to help you so we get in the habit of not making these mental errors, because sometimes I do them when I'm tired. You guys do them too. It's normal. Most retail traders, okay, we make mistakes. We're humans. But just going through this every single time before you take a trade, you don't have to make a big thing about it like how I do. I'm just trying to remind everybody, but it should just be anytime you're flipping, looking for a new trade, make sure you look at your spreads, you look at what lot size you're using so you don't make a mistake. Because, for example, if you did really well in London and you make one critical error with a wrong lot size and it goes against you, you could give back all the profit you made in London, and maybe you were up for 2-3 hours trading London and now you want to trade like this, and it just unnecessary mistakes that you can control. We can control these. Okay, the broker is not telling us what lot size to use or things like that. This is our control. So let's get this, perfect this from now. Get in the habit of doing this properly every single day. So I'm looking right now. I just changed my lot size. I'm looking at my spread right now for gold. Do I want to trade also going right into COMEX when there's going to be a lot of volatility, or do I want to wait it out a little bit, see how the market moves? These are all things that everybody needs to decide. You know, some traders love trading volatility and they're already in a sell and hoping that it's going to continue push down. There's other traders that are waiting. Okay, everybody's different. We can't force people to do one thing. Everybody does their own thing. Okay, and if you're not sure, then just wait on the sidelines. Okay, there's going to be, you can trade throughout the entire day. This is the same thing for Wall Street too. Some traders like to get in right before Wall Street market opens and right at the open. There's other traders that wait. Okay, so just figure out what is best for you. Okay, don't do what other people do. Figure out what's best for you. Some traders enjoy trading volatility. That might be very difficult for you if you're more of a conservative trader and you don't like all of that crazy volatility. But some traders might be in and out in seconds. You know, that might not be the way how you trade. So don't try and trade like that. Stick to what works for you and what makes sense to you. Andrew, thank you. You went on YouTube to hit the like. I appreciate you, man. Thank you for doing that. Carlos, welcome. I hope you had a great weekend, bro. Thank you. Okay, I just added the VWAP. Sorry. Maybe I think my kids were playing with Bookmap on the weekend, watching the bubbles. So sometimes they play with this. But there's our VWAP right there at 1920. Okay, so we're 40 seconds away from 30 seconds away from the COMEX market open. So what do we see? We had a nice bullish run, nice push up. These kind of equal highs, and now they're pushing it down. Okay, so it's coming down. One leg up, one leg coming down. We're going to see, is it going to consolidate, come right back up? Is it going to, or go down? Okay, so we have to be ready and prepared for this. So this green box, I'm going to kind of flip it red right now because we're below it. So let's see how we open. Okay, red. Sellers are now coming into COMEX market open. Here we go. So we open green right at the 9 EMA, coming right into 50% of the previous body, the red area, coming right back up. Okay, so quick push down. COMEX market opens with buyers. That's the thing. If you go in quickly on a sell, you could be in trouble right when market opens. Okay, I tried to explain that. If you're still not in the trade, then you're waiting. Now it's coming right back up. Is this going to be the double top where it came back up here? Let's see if it can take out these highs, if it's a lower high. It's just the first 20 seconds, first 30 seconds of COMEX market open. So that's what I mean, guys. Sometimes you could go into a sell and the market opens and comes right back up. Okay, it happens. Okay, look at now how bullish the move is coming right back up. So we had a small little cool off going into COMEX, and the gold hit a pocket of bids, the asking price, and they're continuing to now squeeze a lot of sellers who are selling into COMEX, and it's continuing bullish. Okay, so if you're in buys, if you weren't affected by that pullback, you're doing really well right now. If you were selling and you didn't do anything, you could possibly be in trouble right now. That's why, guys, like, okay, we have fun trading live, but hopefully you learn something. That's why I was saying, if you go one way in a market open, it could open and go opposite against you really quickly. This is not just for COMEX. This is for Wall Street. This is for any session. This could be also for news. Anytime there's some volatility in the market, anything can happen. We'll see where this body closes in the next 2.5 minutes. So we're starting to see a lot of heat up here now, okay, in this area. A lot of liquidity up here. And then normally we usually have like 8:30 news. Like there's throughout the week, there's normally like a red folder at that time, which affects gold. Today we don't have any red folders at 8:30. So this is just volatility of COMEX market open. Again, this red box now, I'm going to make it green because the volume is currently still above it. So it did create a new high from our previous highs. Got rejected. Okay, so those buyers are stuck up there. There's more sellers there pushing it down. But as it comes down, we're picking up buyers again. So the body is continuing to fill up with green volume. Now it's coming right back up near the high again. So it's got 60 seconds left, 1 more minute. So we're going to figure out where it closes in the next minute. Now real hard selling pressure is coming down. We'll see if it can close back below this area. This might be a potential area to sell down in here, but still difficult to sell a big bullish body candle. Just be careful. This is a big candle. So just look at the range of this candle when the market opened. It's from the range, from the low to the high. This candle is approximately 25 pips. Okay, just one 5-minute candle. So if you're trading with a really tight stop loss, you could get tapped out. Big rejection now. Let's see where it closes in the next 30 seconds. So those buyers that came up, they got pushed all the way down in here. We're going to see again, can it close below this green box? If we can make it red below here, where will it close? Will it come up again? Okay, so here it is. We're right at that 9 EMA now. So those buyers maybe got trapped up there. Are they going to come up again with some buyers? Here's the close, red. It's ignited red. Is it going to pick up a wick? Yeah, equal lows coming right back up. So if you can see those 5-minute candles are equal, and see the little doji, equal lows coming right back up, push down. So if this starts to go down, maybe we can entertain a sell here. I'm going to sell gold right here. I'm going to go in on a sell. Okay, so I'm in a sell on gold. I'm going to place the stop loss like maybe above there and see if it can come down, maybe down, back down into this area. So this is initial sell 1. If I start to add maybe another order, then I want to see maybe I'm giving it room to come back up, maybe get some offers up here and maybe push down because it could pull back. It could come right into here. So my first trade is a smaller one. I like to test out, gauge how the market goes, and if it continues to go down into this direction, I'll possibly add another position. That's why first one I start a little smaller, okay? Feeler trade. For something like this, I'm in drawdown on my feeler trade. A smaller trade. I want to gauge what's going on up here. I don't want to go big first trade on a counter trade, because something like this, if you do, you're possibly going to panic. You're going to get scared of this big green candle and be in big drawdown. That's why the way how I trade is start small and work your way in. You know, some traders are getting better and better at trading that way, because I used to always make these mistakes personally when I was trading. I would always go in a big size right here, and the market would just be pulling back a little bit, collecting offers when I had no idea what was going on, but I would be in too big of a trade that I would panic and close the trade at a big loss, and then to happen to watch it start to go down in my direction. So I start trading smaller size first. If I have to close out the trade, it's a small loss, very small. So it's not taking away from my percent for the day or anything like that. It's just I'm feeling the market out. It's kind of like a test trade. If it starts to go down in my direction and close more down here, and sellers I see are pushing it down, then I'll add my regular position down in here. Everybody trades different, okay? So I'm not going to say that this way works for everybody. This way works for my particular style of trading. You might have your own style of trading, and that's great. But you got to understand too, if we just take any trade, that trade that we might take the first time might be an impulse, might be a fake out, this, that. So there's ways how to trade maybe a little smaller to get a feel of how the market is moving without panicking. Remember what we were talking about, controlling your emotions. I can control my emotions really well if I trade really small, and then if it starts to go in my direction, I can add to that. If this goes against me and it starts squeezing, I can close it. Yes, I will lose 20-25 pips, but if you go in with a smaller size, it probably won't affect you. So this might be forming. It came up, back down. Now we know where our neckline is, and it came back up. So I want to see now it's coming back up in offers. If the selling pressure can continue to push this down, which they are currently doing, that wick is pushing it down. If we can exhaust these buyers and close back below here, maybe retest this, then if it continues to push down, that's where I'm going to increase my size to potentially sell this back down. But I don't want to increase my size against bullish pressure still. And then we have 8:30 right now in 35 seconds. So a new 30-minute candle is going to come into the market. We're still bullish, okay? From the hourly, 30-minute candle came up, pushed down. So you see where we're closing? Right at that high of the day, right there, that purple line. So it's going to be a significant roll where it closes. If it closes with buying pressure, it's probably going to gap up. Buyers are going to push it up again to test today's high, or it's going to close below here and it might open bearish and start to come back down in here. Okay. Okay, so here's 8:30. New candle in the market, red. Okay, flipped green again. So lots of bids still in this area. Let's see if they can push this down with a lower high. Okay, there's a nice push down. Okay, so but what we want to do is get more volume down in here near the low and specifically close down here. And then for bears to take control of gold, we got to start pushing below this VWAP. Currently, we're still above it. Okay, so this is like a neckline. Okay, it's the base of support. The volume is still in here, consolidating. Okay, so we're getting now push down, lower high, lower high. So sellers are lowering the offers, but are we creating any new lower lows in the market? Not yet. Okay, so we want to see if selling pressure can push down and again close it below this area. Can we close below that 9 EMA? Can we close it back below this area? Okay, so it's coming back down now, a shooting star candle. This is going to close in 2 more minutes. This is representing the new 30-minute candle that just opened. So again, can the sellers start to push it and close it below this area? And maybe it can start to push down below the VWAP. Okay, so we're pushing down, but it might be an impulse push down. Okay, so what we want to see is the sellers have a lower high, new lower low. That's important to push down in bearish move, but it's more important where this body will close. Lots can happen in 1 minute and 38 seconds. It's a long time. So sellers did push it down. As soon as we came down there, picked up the bids. So where will this body close? It's going to be very important. It may close with some indecision. We had buyers open it up, we had sellers push it down, we got buyers bringing it right back up. Where and how will it close? It might close with some indecision, 50-50. It could be neutral, and the next bar could be anyone's game. Like buyers could take control of it. Like right now, going into the close, buyers now are in control. So I didn't add another position because it did not close below this area. I'm still in my feeler trade. Okay, last 30 seconds too shows lots of momentum. Who will close this out? Will the buyers close it out strong? Will sellers push it down right near the close? Gold is still very, very strong. Okay, it's difficult to sell this. That's why if you're going in for a sell, smaller sizing until we get more confirmation below here. Okay, here's the close. Now I'm going to flip this box green. We're above the daily again. So it's probably going to push up and take out, try for the high again. Okay, even though that I'm in a smaller trade, I still get disciplined to close these things out and things like that. I just want to make that clear to everybody. I don't just hold trades, even if they're smaller, just to hold trades. Because I don't want to learn bad habits about doing that. I want everyone to understand that. Even if you guys do trade smaller sizing, that doesn't give you the right to just hold trades forever. You still have to be disciplined with them, okay? So you don't learn bad habits by doing that. Dave will be back tomorrow. Dave will be back. Dave went away for a little bit to Ottawa, Montreal, but he'll be back. If only gold can drop 1,000 pips, yeah. Okay, you're looking for 1,000. I'm looking for maybe a 10, 20, 30 pip drop, not 1,000. But you might be looking on a different time frame. Ian, I will be gone to Jamaica, so Dave will be doing Friday and possibly Monday. Okay, so we pushed up right up, okay, again, and it's pushing down. Okay, you see gold is kind of consolidating in here. Okay, it's not making any extreme moves, but you still have to allocate at least 20 pips of risk if you're trading. So I'm trading small. I'm trading with a 0.1 for my account size. Okay, maybe 0.1 might be large for somebody else here, but for me, normally I normally trade with standard lot sizes. So 0.1 is I've decreased my size by 10 times. So that is a lot lower than what I normally trade with. So I'm just trying to gauge who is in control here. I'm down 20 bucks, but I can live with that. I'm not panicking. It's different if I was down 200 or be down $400, then probably I would be reacting a little bit different. But right here, I'm gonna close the trade too, even though it's a small one. I'm gonna close at $20 loss. And then I'll wait later on. Possibly if it comes back down in here, that may be an area to sell down in there at 1893.50, but didn't happen right now. The buyers are still in control of gold, still bullish. In 20 minutes, we'll look at, or another 5 more minutes, then we'll do top down on indices, and we'll look at indices, guys. Okay, so I'll go over to indices. I think some of you guys are more interested in the indices over here. Let's do that then. See, you guys are following the signals. Well, then maybe that's what I'm going to do, guys. I'm just going to mark up the charts and we'll follow the signals. Maybe it's better that we do that. Okay, so just US 30 really quick. I'll leave it on gold over here on Bookmap if you guys are watching. I'm just going to do my top-down analysis to get ready for Wall Street very, very soon. So just going through US 30 over here. We had those bearish days last week, Tuesday, Wednesday, Thursday. Friday was that indecision candle that just stopped the market. Look at the neckline where we're coming down to. Okay, remember that double bottom breakout over there? That's what caused that big bullish rally on the Dow, and it came all the way right back down and retested this neckline that was previous resistance, turned to support going forward. Okay, so what happened last week on Friday? We pushed down, new low, came down here, 34,263, came back up almost to 50% of that previous bearish candle, pushed down, and it closed right there. So our critical area is where our low of the day is. Gold is continuing to squeeze through there. Okay, so right here where our low of the day is on US 30, it's at this critical area. So we opened up on Dow, came down here, holding. So where's our support level? It's below here, holding. Currently, I know it's early, just started this week, but it is holding. It's coming off of this indecision candle coming up, broke Friday's high, and we created a new high today at 34,655. Right up here. And when we came up here, okay, so our high up here and the pullback. If we do pull back into Friday's high, might be support or resistance going forward. So I'm just going to place a yellow line right here. That used to be Friday's high. We broke through it today, and when we did come up there, we came back. We're retracing right back down here. Okay, so above here, there's going to be maybe our resistance point right up here. That previous high, if I bring this across red, now I'm just trying to maybe figure out where today's resistance is sitting on Dow, right in here, as we go into Wall Street. Okay, and if we continue to break out, maybe up to where it opened and closed up here at 34,800 level. Right up here. Okay, so remember this area that I was just saying. That used to be resistance over here. Resistance, resistance, resistance. Volume closed above and had that big bullish push. Now we came all the way back down into this area where Friday it took out that liquidity, came back up and closed above, and now we're holding this area. So bring this zone across for this week. This might be where it may consolidate inside here. Maybe it does break out a little bit more bullish above here, or it consolidates flags in here and it's continuing to maybe push down in here. This could be a huge, massive head and shoulder. Like this could be the big left shoulder. This is the huge head that broke out, coming all the way right back in, and now it could be trading in here and see if it will come shoot back down into here and go bearish this week. Okay. And if it reverses and comes down bearish, come back down here and we break, okay, we have to identify Friday's low. It's fresh in the market. Friday's low is not real recent, okay? But if it comes down and makes a higher low, like down into here and push right back up, where would that higher low be? It could be in this area where there was a previous resistance, and then it turned to support right here at 34,327. Right there. Okay, so we do have a bullish candle that gapped up today. Okay, we closed right there on Friday. They gapped it up. It came down bearish. It filled the gap, caught that wick, came all the way back up. We took out Friday's high, continued for a new high today, right up to that purple line, and it's pushed down right through here. Okay, so let's go on to the 1 hour to see how this thing looks on the 1 hour. So we're pushing down here on Thursday, continue to push down. It pulled back, lower high, new low. There's those tweezer bottoms that we were just talking about, equal lows. So this is how they're playing out on the hourly. So if you catch these type of moves on all different time frames, they have the same characteristics. So equal lows, and we had that big bullish push that came right back up to here. Consolidate here Friday. We go into Sunday night, like the Asian session. And then it came down to this level, 2 a.m. And then here's London. London was a big bullish move. Hourly big bullish candle closed all above this previous resistance. Okay, so where did we have hourly resistance in the market? Right here. These bodies were hourly resistance, hourly resistance. Just going to place a white line here. This is where it's coming down to. It might come down into this white line, and it's representing 50% of the bullish volume in London right there. half of it approximately. So we're trading now barcoding for US 30. 5 a.m. green, 6 a.m. red, 7 a.m. green, 8 a.m. right now red coming down. We're going to see how, if it can hold right below here, 50% of London's volume, how will it react if it comes in here? So I'm just placing that green box, 50% of London's bullish volume, to see if it can hold in here. You can see our high of the day, it's getting rejected. No new highs up here. Right now coming right back down. Let's put a hourly trend line right here. And we'll see right there. You can see today, if that hourly volume can break that trend line, and that's 50% of London's bullish volume. If it breaks, maybe closes below there, maybe comes back up to retest this today, and if it gets rejected, maybe it might come down to break the low of the day. Maybe the Dow could come down into here for potential double bottom here, or a lower break. That's one potential path that could form today. Okay, so we are coming down on the hourly right now. If you go into the 5 minutes, okay, here's London, 3 a.m. That big bullish ignited candle that came all the way up, ignited, engulfed all of this, and continued to push up, pull back, new highs, pull back, new highs. Where it started to come down a little bit, came right back up. The high of the day, you can start to see the resistance forming, and now it came down. It broke this support level. So support to turn into resistance. And then our most recent low right now, holding, let's see, right over here, where we had those 3 wicks. 1, 2, 3. That's where we're trading at right now. Okay, so it is pushing down. We'll see leading into Wall Street how it's going to trade. Okay, so there was a Dow sell set up at 34618. 34618. Okay, right below here. 34618. This was at 645. Okay, below here. So these are from the SST Scalper Pro, pushing down. Okay, if you want to measure approximately 50 pips, okay, if you guys got that, I saw some of you guys got that sell. Okay, so let's see if it can come down to test that hourly trend line and maybe back down to this bigger green box. If it can come all the way down into there, and we'll see what happens down in there. Okay, and we'll also get ready for NASDAQ for Wall Street as well, and we'll leave these two side by side. Okay, so we'll do NASDAQ for the traders that do NASDAQ. Let's take a look on the daily how NASDAQ is moving. Okay, so similar to US 30, where we had the bearish moves, lower lows, lower highs, lower lows. Started last week, Tuesday, Wednesday, Thursday. Same candle pretty much. Friday was that low push, came, and very, very similar to US 30 on the daily, similar setup. Okay, so let's see here. Critical area, body, and today's low, purple line, holding. below us, Friday's low. Okay, if we do come back down here, I'm just going to mark Friday's low. I'm going to mark today's high. Okay, we're coming into approximately 50% of Thursday's red volume. We're coming into it right now. And when we came up there, we got rejected at our high of the day. So it's a little bit of a rejection, cool off. We still are above here, Friday's high. Still have volume above it. So it's considered to be bullish right now today, but if you look at the overall, we're still bearish on the higher time frame. So could be counter trading, could come up a little bit, bullish momentum. And if we do push our high, we could break out for NASDAQ 14,880 up there, and then this area 50% on Wednesday, you can see it got rejected there, and we have wicks there. So that looks like a critical area in the market right there that used to be support right there, turned into a supply area. So if I put like a red box right in that area, that's where maybe it could come up bullish all the way up to here and maybe continue pushing down, where it could be a pullback into this area. This used to be support here. 50% of that bearish candle is right there. We traded into it on Thursday and got pushed down. Now we might be coming up again to maybe test that higher time frame area up there. If it does break, then maybe push up to 15,050. Okay, and let's go to the 1 hour. Okay, hourly trend from down here. From 10 a.m. on Friday, NASDAQ pushing up, resistance, push back down, holding here support, continuing to close above, continuing at 3 a.m. So this was similar to Dow in London, big bullish candle, close above, and we continued with bullish momentum 4 a.m., 5 a.m., 6 a.m. red candle. Now we're barcoding. 7 a.m. green, we're coming back down red. So it is consolidating in this range right in here at the high and this area right here. So we have hourly consolidation right here. We're holding above 50% of London's move. Okay, so just right there. I'm just going to place a white line where it was previous resistance, and it's about 50% of London's volume. Okay, so if we continue maybe consolidating and today NASDAQ breaks out of the high of the day, we may continue to push up to 14,880, maybe up to this area, this bigger red box right in there, 14,950. You can draw your trend line, so maybe don't counter trade. Okay, here it's respecting the trend line, here it's respecting the trend line. If it does come down here, we'll see how it reacts. There's 50% and where it could be right at that trend line right there. So if you don't want to kind of counter trade it there, maybe get caught in there, maybe just bring your consolidated box below that yellow line just a little bit. Okay, and let's go to these 5 minutes now. Okay, so the 5 minutes have their neckline that just broke right here. This was support there, support. So if I bring this across, are we going to trade below this and continue to push down? Okay, and there's a NASDAQ sell setup at 778. Okay, right in here. Okay, so US 30 came all the way, broke that trend line right down to that green box. There could be some buyers that rotate it right back up, but we're looking for lower highs to take place maybe at 50% of this candle, maybe pulls back, trades, continues. If it can break down here, could have a continuation drop. Okay, and we're getting close to 9 a.m. in the next 45 seconds. So if you guys are in these from the SST Scalper Pro guys, just please monitor them, secure if you can. Let's take a look at gold over here. Gold is still bullish, guys. Okay, so look on gold over here. 1899.75, 1900. Right here. That big wick right there. Over here. Bring this. And we'll see if gold can trade up to 1900. Joshua, possible sell on gold at 1897. Just be careful. Careful selling it. Every time it pushes down, it's continuing to go up. There's the RSI is just, yeah, careful trading gold right now. Maybe let's see if it can come up to 1900, up to here. Just careful. If you're trying to sell gold, what I recommend, guys, is just go small if you can. I would, or don't sell it yet. It's still very bullish. Every pullback is continuing higher lows and new highs. You have to be very, very careful selling it. Maybe it wants to get up to that 1900 up here. Yeah, it's really, really pushing up there. Gold is very aggressive. Okay, guys, I'm just going to go grab a drink, and I'll be back in just a few minutes. I'll leave it on these indices for you guys, and I'll be back. Just give me a few minutes. Everyone, if you guys want to take a break, go grab a coffee or go to the washroom, whatever you guys need to do. We're getting close to Wall Street in the next 25 minutes, and we'll be back. I'll just be back, guys. Just a little break. Okay guys, welcome back. We're about 20 minutes away from Wall Street. No major news today in the market. Okay, so this big level for US 30, if we break, okay, where do we have some support? 34,508, 510 area, like right through here. See if we can cut through there. NASDAQ, a nice 3-bar play, red. Got your small into the green bar, ignited, continuing to push down. The CVD, this cumulative volume delta, from 815, 830, 845, 9, we have 915. It's pretty, look how balanced it is. It's balanced. 1. Okay, so lots of selling pressure, but we could pick up some buyers, some bids. It might rotate right back up, but it could be a lower high and continue to push down. If you guys are in sells, it's looking good. Continue to push down. Trailing stop loss, like risk management, guys, if you can. Yeah, gold. Yeah, gold might. Oh, remember, okay, so gold has pulled back right here, pulled back, and then it went right back up. It pulled back again and went right back up almost to 1900 to that high. Could pull back again and could continue to go back up. So just careful with trading gold. This level, just flip it green, see if it will hold right here at 1895, right here. Let's add some EMAs. Okay, so the 200 EMA is right here on US 30. There's the 9 EMA. It could get ready for a potential maybe death cross coming down, but it might pull back a little bit, come up, then go back down. If you look at this RSI is down to 20. Okay, so it's extremely oversold on the lower time frame, but it could continue to push down and maybe squeeze buyers if they're in there trying to buy this. Could get a little bit of a bounce. Okay, any questions before we get ready for Wall Street? It's in 20 minutes. So if you guys want to go to the washroom, grab a drink, grab a snack, whatever it is. How do you find the 8 cap on your charts? Just searching. Just when you go to your search, add your Dow or NASDAQ, and then you're going to see your different brokers, and then just choose 8 cap. You'll see this 8 cap. Okay, so we're getting a little bit of a pullback here at this green box. That's where some bids are, some high level liquidity are in here. I'm just looking at some pre-market data in the market. See if anything is unusually up right now. Tesla is up 2.5% in pre-market for NASDAQ. And it's interesting how it's pushing down in pre-market with Tesla being up 2.5%. That might play a factor in when the market opens up at 9:30. What do you guys think of Bitcoin? Big drop? Do you guys think lower for Bitcoin? Do you guys think it's a good area to start buying it, to start accumulating? Under 20K for BTC. Okay, so gold is retracing down. Remember the high of the day break was right here at 1894. Broke above it. It could rotate all the way right back down to test the purple line, which is right here at 1894 and a quarter. But we're going to get ready for Wall Street in the next 15 minutes. So again, light day in the news. Over here, we don't have much. Normally at Wall Street, there is some news. Today, not much. Astro, you got confused sometimes on a 5-minute, 15 or 30-minute. Try and stick with one is what I would recommend. Instead of like 5, 15, 30, 1 minute, pick one and try and stick to it and try and get consistent with it. So for example, if it's 15-minute, try and trade on the 15 minutes and until you're comfortable with it. Because if you start flipping from 15 to 5 to 1 to 30, it just might confuse you. So just try, maybe pick one that you feel is the best one that you like to trade, and learn and perfect it to the best of your ability. So lots of heat now for US 30. We can take a look at NASDAQ in the book. There's a lot of heat coming in right now. Okay, so we can see US 30 pulled back right into here and continuing to push down. So sellers are still in control of pushing it down. This is where you have your 9 and your 200. It came all the way right back up to your 9, push down, continuing. We'll see if this body can close below in the next 3 minutes. Sellers are still in control, so careful buying. If you're counter buying US 30, it is still in full control of the sellers. It just came, pulled back up. A lot of buyers just got trapped in that area, and the market is continuing to push down. I would be careful trading into Wall Street. Just be careful, because there's going to be a lot of volatility that when the market opens. Just, if all I can recommend is, if you're not sure of the direction or you're just speculating, trade small, trade very, very small, and see what the move is. Then maybe that's where you start to add if it's confirming your bias. sometimes we get caught counter trading, sometimes you get caught, it came up, but that's why maybe give it levels to close above. Same with here, this green candle did come up. It's good for about 20 pips if you pip and you dip, or you're on trading on the 1 minutes or the lower time frames. But did it close above any of the structure? No, not yet. So still, sellers are still in control leading into Wall Street. It may reverse when Wall Street opens, but right now it's still a lot of selling pressure. Our low of the day is right here, 34,470. Okay, so where will this body close? Possibly down here. If it does, then we flip this green box red, and maybe this might act as some resistance and continue to push down. Okay, big push, guys. From the scalp signal, almost 100 pips. So congratulations to some of you guys that took that. That's unbelievable. Really nice setup right here. Okay, remember that red line right there? Okay, I got it from over in this area. Okay, sellers are just in full control. Be careful, counter trading. Okay, so look at where we closed. We closed below this zone. Let's quickly flip this red just in case there's some pullbacks in here. So what I mean by pullback, if it's green, if a candle comes up green, maybe 50% of that previous red candle right into this red box. Lots of heat and liquidity above us and below us. It's just pending orders are populating in the market, getting ready for Wall Street open in the next 10 minutes. And the market could come up and down and trade inside here. The size of these candles are going to increase. So just understand that there's going to be volatility. The last candle, the average range of US 30, was 45 pips. So these 5-minute candles can trade anywhere from 25 to 50 pips. So if you're trading with a tight stop loss, for example, 10, 15, 20 pips, you may get stopped out of a trade. So just all I'm saying is lower your risk to make up for that, okay? Because the candles are going to start to get a little bit more volume. And if you're on the wrong end, you could get stopped out. Yeah, Dow has a potential death cross. So this is where the 9 crosses the 200. It could come all the way back up and test it. But right now it's starting to cross over. It's oversold. There's a little bit of bullish divergence and things like that leading into market open, but they could continue to push it down and trap a lot of buyers that are buying right now. If you're not in a trade, then don't worry about it, okay? If you're not in a trade, don't stress it out. Going into market open, make sure you have some rules, okay? Some people love trading right at market open. They get right in. They might have a pip and dip style, or you get in, you might get stopped out quickly. They're okay with it. They're not over leveraging their accounts. There's other traders that don't trade for the first 5 minutes. They wait for the first 5-minute close to see what's going on. There's other traders that wait for the first 15-minute candle to close. If you're a 15-minute trader, maybe you wait from 9:30 to 9:45 to judge, see what's going on. Maybe you trade at 10 o'clock. Maybe some traders trade at 10. They allow Wall Street to open. If there's any red folder news, they allow the market to digest it with Wall Street open, and then they continue to trade after. Okay, everybody has rules. Just make sure your rules you understand and you follow them daily. Don't change. Like today you want to trade before Wall Street. Tomorrow you're going to wait. Next day you're going to wait at 10. Just pick a style and stick to it, and then start to see if you're consistent at doing it. If you're not, then you can fix it. You can change something up. But if you're doing something that works and you're doing really well at it, don't change it. There's some traders in our group who maybe wait first 5 minutes. They have rules, and then they trade after. And maybe if they're doing really well with that, I would highly recommend that you continue trading like that. Don't change it up. If something is working for you, don't change what's working. Try and improve it as to the best of your ability. And let's just please be careful trading Wall Street on a Monday. It could be choppy for all we know. It might be, like some sessions could be really choppy. Some sessions could be really good. I always take it, I start off slow, and then I see how the market moves. If there's any trades that I take and I'm speculating, again, reduce your lot size, go small. If you're going to test something out, a feeler size. Everybody has different small sizes depending on what your account is. If it's 10 cents, that might be a small size for somebody. If it's $1, $1 might be small for somebody. But don't go all in is what I'm trying to say, right at market open. It's not the best strategy of trading. Yes, you might get lucky, some market opens and you'll do really well, but to consistently do that over and over and over, one mistake could be could wash away a lot of your gains. So just be careful. If you're gonna speculate, try something out. I always recommend small. Get your feet wet, see what's going on. If it starts to go in your direction and it starts building, then maybe you can add to your position with the momentum. Okay, so NASDAQ is holding. Remember this yellow line? Okay, we got that from our daily analysis. It's holding. Has it broke any new lows? No. It's got like equal lows there. So this is where some buyers are coming in right before market open. US 30 is still right in this range here. The 9 cross below the 200. So it's still technically bearish. We do have a bullish candle. But if we look overall, lower lows, lower highs, lower lows, this could be another lower high. Wall Street, maybe, if it potentially breaks like above that trend line, maybe pushes above here, then might come rotate back up. But currently, it's still bearish. Okay, and then go through, again, the motions. Look, if you're going to trade. If you're going to trade Wall Street, some might be trading Dow, some might be trading NASDAQ, some of you guys are trading DAX, some of you guys are trading S&P, whatever it is, whatever security you're trading, whatever index, make sure you just go in to your MT4, look at your spreads, make a habit of doing this, fixing your lot size, okay, are you going to go in with a large size right away? Are you going to go in smaller, adjust it, make these adjustments? Because we're less than 3 minutes away from market open. So you're going to start to see lots of heat coming in the market. The institutions are going to start putting a lot of pending orders in the market, hopefully to get triggered. And we'll see who takes control of the market. Current transactions in the last hour are leaning towards buyers right now. Cumulative volume delta is 182, but that could easily just get engulfed by a lot of sellers and continue push down. But buyers are building a little bit inside here, but we still have lower highs. And pick which security you're comfortable trading. Some of you guys prefer trading NASDAQ. Some of you guys prefer trading Dow. Just pick what you are comfortable with trading. And please, everyone, trade with proper risk management. That's the most important thing in trading. So it's currently holding this zone, green. Okay, I'm just going to make it green because we're currently trading in it, holding it. Lots of liquidity. We are below the VWAP. We've been below the VWAP for quite some time. So sellers are in control. But market open, things can change. Understand that there's liquidity grabs that happen. The market could come up to grab some liquidity and then continue pushing down. It could come up, it could go down, take out the lows, come back up. It could get choppy at market open. Just please, let's be careful. One more minute to go, and then we have Monday open, Wall Street. Okay, so 30 seconds. Things are going to start to open up. You're going to see lots of volatility. See how big the transactions are getting? Okay, so there's a lot of transactions going on in this area. And you might see like an initial move out of the gate. You might see big move up, big move down. It may just go to grab liquidity and come right back down. So if you're not trading it right away and you might have rules. Okay, so here we go. Here it's getting started. 5 seconds to go. And then we got market open. Okay, so here, this is volatility. Okay, so sellers continuing to push it down. Sellers are in full control. NASDAQ is going the other way. Could have been Tesla's up 2.5% in pre-market. But I'm watching over here US 30. Okay, so they just came down. They took out the low. Grabbed a little bit of liquidity. Could get a wick, come right back up. See if it flips. Maybe if it follows NASDAQ. Okay, so NASDAQ is bullish, coming right up to that previous area of resistance right over here. If you haven't taken a trade, it's not the end of the world. It's all good. Just some traders, it's only the first 45 seconds. Okay, just be careful. NASDAQ came all the way right up to that red box and pushed all the way right back down. So if you bought, some traders, you have to be fast in and out if you want to scalp that. Otherwise, you could be holding. Okay, if you bought that move, it's coming right back down. If you're not in a trade, then just continue waiting. Let's see how this thing builds. Okay, so we picked up lots of liquidity. They took out the low. This could potentially flip. Okay, but look how we opened. We opened ignited red on US 30, came all the way down, coming up, but we still have the red body. Okay, so it's still holding the market down. Still, those offers are still accumulating. All of those bids coming into it, like all of those bids that are coming into it, there's still a lot of offers in the market. Big drop. See where that cumulative volume delta? So right when market opened, there was a lot of selling pressure that pushed it all the way down, but it caught some support. Coming right back up. This body is going to close in 2 minutes and 55 seconds. Okay, so we're going to see if they can flip this body. It's a hanging man right now, but we're going to see if it can flip, maybe close up here, flip as a bullish pin bar, maybe a hammer candle in the next 2 minutes, could flip, and then what we're doing is we're looking to see if we can take out this resistance right here, and maybe it can start to push through here. Okay, so a lot of buying pressure, okay, a lot of buyers. Now the body's going to flip, turn into a hammer. Okay, and there's our VWAP right up there. So it may come close to that VWAP. Do you see how that big, a lot of heat right below the VWAP, a lot of orders in there, a lot of offers. So it's a bullish pin bar flip to a hammer. So it could potentially break out of here. If you're waiting for the body to close, then you got 90 more seconds to wait for the body to close. Be patient. I'm waiting for this body to close. Yeah, NASDAQ is looking good, breaking through. And you see, if you get excited and you buy up there on an impulse before the body closes, then they push you right back down. And that's not a small push down. Okay, if you bought near the high up there, like how it came down there, it's 30 pip drop. Okay, so some traders will panic in situations like that. They're trading too big. That's why I always recommend, if you're trading volatility, go small. Go as small as you can on your account to test things out if you're going to trade. If not, wait for this body to close. 30 more seconds. NASDAQ is really pumping out of here. If NASDAQ can close above, flip this red box green for maybe a possible retest of this zone. Okay, very nice move on NASDAQ. Watch where it will potentially close. Next bar could be ignited with pullback. Remember 50%, okay? From open to where it closes, try and judge where's 50% in case there's a pullback to see if it will hold majority of volume and continue to break from that high of the day, that purple line. Here's the next bar. So we're ignited on US 30. Okay, I'm just going to flip this zone, the red to green. NASDAQ is pumping right out of it. NASDAQ, you can be in buys, okay? There was a ignited, popped the wick. Same with US 30. Okay, I'm going to buy US 30 too. As soon as it breaks above here, that's what I'll look for a buy on US 30. As soon as it breaks again above this high, testing this VWAP, I'll be looking for a buy up here. Okay, now it's consolidating right in this range. Sorry, I'm just going to try and clean up my chart a little bit. NASDAQ, bullish. Okay, 50%. Let's move up to 50%. Yeah, I'm gonna buy now. I'm buying US 30. Buy. And I'm gonna place my stop loss below the green box down in here, maybe below those bodies. And I want to see if it can maybe potentially come up to that daily up here. And if it can build all these bids below us down in here with pullbacks, maybe pick up all these bids and continue to take out these offers above. Okay, so if it gets up to that yellow line, could be 25 pips up there. It just ran for 15, 20, but also if volume can close, collect more bids. As it pushes down, watch the depth of market. Okay, we're getting this block coming up a little higher. And where it's going to close is very, very important to go forward. We're right at that trend line. We're above the 9 and the 200 EMA. It could trade with indecision right here for a little bit, but let's see where it closes. It's going to be very, very important. Coming right down, is this block going to hold with bids? And I know some of you guys are trading 1 minute candles. Some of you guys got in a lot earlier on buys. Some of you guys are already dipped out of the market. Okay, everybody trades different. If you're a 1 minute scalper, I know I trade 1 minutes too. I know how it is. Sometimes you could be in a trade for 30 seconds, 1 minute, 2 minutes. get your pips and get out of the market. Okay, so NASDAQ, very nice and bullish. Again, we're above the purple high. Let's see if it can hold above here for NASDAQ too, if you're in buys on NASDAQ. Okay, if any pullbacks, we got to test this green box before it comes down here. And I'd like to see if US 30 can hold this area right here, kind of above this area. If it can build, and continue. The close above the VWAP is going to be very important, like above here. If US 30 can close above here, any pullbacks, maybe pick up, and I want to see if it can get this liquidity up here, to be honest. One more minute to go. It's a spin top. Lots of indecision on US 30. The buyers are bringing it up. Sellers are still pushing it down. It's got the indecision. Where will it close? Important close. Can the volume close back above this area? And then can they build off of it on the next bar? So we have 30 seconds. Who will control the close? NASDAQ is all buyers. Buyers are in full control of NASDAQ. Okay, we're moving back up in US 30. Guys, I'm concentrating on this VWAP area for US 30. It's going to be very critical, okay? Can we fill a lot of bids below us, right below the VWAP for the next bar if it comes down? Then maybe we pick up those bids and we can drive through that daily yellow area and maybe up to that red box. Here's the close. We want to close near the high. That will be really important, okay? So they closed. Any pullbacks right down into here. Can we catch a quick wick quickly? Maybe pick up some bids fast. Maybe flip this thing. No, so it's testing again the trend line. 50% of the bullish candle. Okay, we did not hold it. Now it's coming down bearish, back down to pick up liquidity. Can we pick up these bids and come back up? So it was a strong close, but so much selling pressure for the Dow right now. Ignited bar on NASDAQ, continuing to break out the high. So go 50%. If you got a trailing stop loss, what I would recommend for your NASDAQ is have a trailing stop loss, continuing to move up 50% up here. US 30 could be coming down to take out pending orders into this block. And maybe create a double bottom. Okay, so one bottom, there's our neckline coming back down, maybe a double bottom down in here if it can hold. That's the thing, if it can hold. If not, then sellers could be in control, close it a little below here and continue to push down. So this is going to be the test to see if it can hold right here. Yeah, it's a nasty candle, Kim. It's nasty. This is Wall Street. We're still in the first 15 minutes of Wall Street. They could clear pending orders, everything like that. That's why I always recommend trade small, speculating to see what happens, because these are not small candles. These are big candles. Okay, but if they pick up lots of liquidity and bring it back up, yeah, that's about measure the move. What is it? 30, 40, 50 pips? Yeah, it's a big push down. For institutions, it's not big, but for you and I, for retail traders, that's huge. That's our stop losses down there. And then they can remove us from the trades, grab all of the pending orders down there, and continue to push the move up. And then 2 more minutes, we're going to go into the next 15-minute bar. So if we look at the 15s, indecision. Okay, it came all the way up, came all the way right back down. Now it's building again. Okay, so I want to see if it can continue to close above here. If it builds above here, I might build one more position above here if it can close to get that to continue to push up to this yellow line, maybe potentially up to here. Okay, and NASDAQ is still holding above 50% of this bar, so it's still bullish. It did create a new higher high. Big close coming in one more minute, and our new 15-minute candle. Lots of selling pressure, very aggressive sellers on US 30. So these are two different securities, guys. Don't think that US 30 moves exactly like NASDAQ and S&P and things like that. These are completely different securities. That's why I say choose which one you are comfortable trading. They do move different. So just because NASDAQ is bullish does not mean that US 30 is bullish. These are different securities. Okay, that's where I recommended stop losses right there, because if it takes out this low, okay, and it closes below here, next candle could open ignited bearish and push down here. We opened green, okay, so you have to go through, you got to flip this red. It could continue to push down. Okay, so I'm out of that trade. I didn't take out any pips. Again, I had this mistake on Friday. I didn't take out, and now I got stopped out. Today may be a nice sell day. Continuing to take out today's low. This is when it should take out today's low. Now with this Wall Street volume coming down, see if it can take out today's low. Kim, you go for minimum scalps 5-10 pips on US Open. It's too volatile. I understand. I know how it is. I know exactly how it is. I was in that buy too. I got 20 pips, but I didn't get out. I did the same thing on Friday, and I tried to improve it today. I thought maybe it would have enough momentum to tap this yellow daily area right here, and it didn't. And then again, the good woulda, shoulda, couldas, and then now I got stopped out. Yeah, I can go to 1 minute, but 1 minute might be too fast for some individuals, guys. But yeah, you're correct. Maybe we should look at 1 minute. We can definitely do that. Gold sold off. Okay, but I still use my levels, guys. Okay, so I don't change my levels. Okay, so this white line,
I will be watching this today. Like what I do is I put an alert up here, and if I get alerted later on today, if it does come down and pick up the liquidity from down here and comes back up, I'll get alerted up here at 34,550 for Dow around here. And if it picks up all the pending orders and comes back up, I will see what happens above here and maybe continue with maybe looking for a buy. If not, any pullbacks, okay, any pullbacks that come up could continue selling it down. But want to see if it can break today's low down in here. Kim, last week you did a great 1 minute scalp Thursday and Friday. I understand, but if we go to 1 minute, it might be too fast. Then someone's going to say, Ron, you should have done 5 minutes. It's Kim, when I trade personally, I trade 1 minute candles and fives. But for everybody else, it's hard to. If we go to 1 minute, they're fast. Ask yourself, okay, if we were buying, would you have got out in just a couple minutes? You got to understand. Sometimes some traders don't get out. If you were in a buy here at 934, where it came up, where I was, if I was watching the 1 minute, I perhaps would have got out. But I was following that 5 minute volume right here as it was coming up here. And yes, had I have watched the 1 minute, possibly would have. I don't know. I don't know. I don't like to trade with the woulda, shoulda, couldas, hypothetical what would have been done. But I traded small. I was going $1 a pip at market open. Again, I got stopped out. But they're minimal losses, and I have the confidence that I could recover my losses back today. So today, Monday, I took it easy. I did it with gold, and I did it here. That's why I held a little longer, because I was in a smaller position to see how it would react, and then I was going to add positions if it broke this daily area. It didn't, so we got to go back to the drawing board. Yeah, it's not for everybody, Val. Maybe you got burned on 1 minute. It's not for everybody, guys. Especially market open. Okay, if you don't know how to trade 1 minute candles, I don't know if I would recommend it for Wall Street open, unless you've practiced it. Okay, but there's new lows. There's bullish divergence on the 5 minutes, but it's still very bearish. So careful if you're looking for buys today. It's not the time right now. It's attempting to break the daily low and continue dropping. So it sells. If you guys are in sells, selling. So we just broke the daily low. Watch now to see if they're going to come down, take out all the pending orders, and come right back up. Like later on this afternoon, I would maybe be looking for a buy, maybe above that area. This is for later today, to see what happens down here. NASDAQ is still holding, pushed down, holding here, might continue being bullish. Is there a correlation between NASDAQ and Dow? No, no correlation. No correlation. NASDAQ is tech-related equities. US 30 is a mix of everything. Okay, so it took out the low of the day, came down to about 50% in this box, got some bids, and coming right back up. Where will it close in 2.5 minutes, and how will it go into the next hour? So take a look at the hourly candle. It's very, very bearish, still continuing to push down. But previous when we came down, it came down to here, 34,423, back up, came down, back up. We might be coming down, so careful today. Let's see where this hourly candle closes in the next 7 minutes. This is going to be interesting. Where will it close? Will they just take out the low down here and come right back up and close it above the purple line, and maybe it may pull back up? But if you do, it could be short pullbacks because the last 2 hours are very, very bearish. If this closes below here, next hour could just pull back and then continue selling down and fill these wicks and continue dropping maybe down to 34,385 today, down into this area. Okay, so that's why I want to watch what happens at this purple line. Same with NASDAQ. It's well above the purple high on the hourly. If it closes above, if it holds the purple line, we might continue to have bullish momentum on NASDAQ today. US 30 is moving opposite direction, bearish. Okay, so that's why I'm watching to see where it will close in the next few minutes over here. Yep, the SST Scalper Pro does include guidelines on how to use it. I'll show you right now. It gives trade management rules and everything, constantly updating. Okay, so over here, this was the US 30 buy. Okay, so I'll show you where it came out. Came out at 7:15 a.m. Eastern. Entry above gold 1889.50. Suggested TP and stop loss chart. And as it's moving up, giving a little bit of trade management, what we recommend that you do. If you follow it, that's up to you. But some recommendations: up 40 pips, up 60 pips. Should be number one at a break even now or scaling out, and then it ran 80 pips. Also on indices, there's Forex, Dow sell over here. Where did it start? Started up at what time? 6:30. So before we even started the call, this was DAX, Dow also at 6:45. So the area 34,618. Suggested TP, suggested stop loss. As it's moving down, there's the double top M pushing down. Dow sell running 20 pips. Again, maybe secure a quarter, 25%. Leave the remaining with a break even. And if the trade plays out like it did here, it's going down 40 pips, 60 pips, and coming into before Wall Street, coming down 80 pips and running 100 plus pips. So really, really nice. Updated right now. 170 pips on the sell. So careful buying. There might be just small counter buys, but like right here, see this green candle? It might just be some counter buys. If you're countering, it might be 10, 15, 20 pips. Like, it just measure the move. If it engulfs this candle and it comes up green, like from where it is right now, it might come up 25, maybe 30 pips, and then might get pushed down again and continuing pushing down. So you have to be careful. Here in NASDAQ, it pulled back. Did it close below here? No, right back up. Now it might continue pushing to see if it can break out this high and continue to move up. So what happened here? It broke today's low down into here, the purple line. That's today's new low right there. Came back up, we opened, red, came down, higher low, coming right back up, bullish engulfing. So like this, if you counter bought this, you should be up maybe 20 pips right now, okay, minimum. And you could go to a break even. Let's see if it can extend a little bit higher, because this is one leg down and the counter coming back up. So it came down, countering back up. It might come up a little bit. Like it's still a lower high, it might come up, and then if it pushes back down, we're looking for the double bottom down into here to build, to pick up bids, and it maybe come up stronger, and then maybe look for a potential buy above this area to continue to come up to the previous high. Maybe it doesn't. Maybe it only, that's it. Maybe they shut it down right there. Like it just came up, lower high, and maybe they push these buyers down. NASDAQ is beautiful. It pulled back, continuing to hold, buying momentum. Okay, so maybe it needs to consolidate in this box right here. But yeah, nice buys off the bottom. So what happened was It broke the purple line low. They came down, hit the pending orders, came back up. It opened, small pullback, and starting to engulf. Some traders will buy this move, buy here, place their stop loss below the previous low, and collect 20-25 pips on a counter trade. But has it pushed above the previous high? Not yet. So now it's going to try to push above the previous high and attempt 50% of that previous red candle right there. And if it can break 50%, may have a high probability to come back up to that 9 EMA and right below that red box right there. Okay. And then in a minute and 15 seconds, you're getting a new hourly candle open in the market. Okay, so that could change momentum. It could open bullish and continue maybe pushing up for a little bit. It could also open bearish and come back down to test 50% of the volume or back down into here. So if you're anytime you're countering a move, if you get 20, 30 pips, 40 pips, maybe secure, or because it could come right back down. Just like here, if you sold NASDAQ, yeah, it did push down, maybe 20 pips. But if you don't do anything, it could come right back up. So counter trading is not easy, but you have to be very disciplined when you're countering a move. You have to know understand the consequences of what can happen if you're countering a move. Right now, this is very, very bullish. So we broke above 50%, coming right up here. Nice move. Let's see where it closes. Going into 10 a.m. Okay, here's the close, 8 seconds. Remember pullbacks. Start to do 50%, like right now, before it even closes. I could see right there, 50% is right there. Here it comes pulling back into it. Okay, will it hold? Same thing with NASDAQ. Where's 50% of that previous candle? It's right there. Go to 50%. Okay, see how it's red now? It got rejected right there, coming down. Will it hold? Right here, 50% right now. Will it get a wick in there? Will it hold? If it can't, probably going to come down a little lower into here. You see how it came up really, really, really nice and bullish, and then 10 o'clock, they just switched the momentum. How did it not open and have buyers at 10 o'clock? Okay, so you see what I mean? This is counter trading, and it's a nice candle to counter. Like if you bought, okay, you saw the wick, take out the low, next candle come up. That was a 60 pip candle. Okay, if you don't do anything at 10 a.m., the new hourly candle can easily come down and take away 20, 30, 40, 50 pips of your profit, maybe come back down where your break even is. And you just left all of that profit on the table because you countered, and we still have to respect sellers are still in control. Even here, Wall Street was a counter move. I got caught on that one up there, and it came right back down. This is another counter. If you get caught, it could come right back down. Now we see if it can build. If it can build in here, if it can continue to build, maybe possibly close above here. After the call, we could see maybe US 30 making a bullish move. If it closes back below here, the sellers could continue selling this off today. Okay, right now it's a big bearish engulfing candle. So just like that, what goes up can come down. That's why I always recommend, like the way how I trade is always I pip and dip. I don't play woulda, shoulda, couldas and what could have happened after the fact. Sometimes if you're countering, you have to be disciplined and understand where it could go, what you could get out of it, and be happy with it. Okay, sometimes if you only get 20 pips out of it, you get 20 pips, that's good. At least you secured. But guys, that's it for me. I got to run some errands today, this morning. We'll be back tomorrow, guys. PK has post later on. Our webinar this week will be Tuesday evening. If you're going to continue trading, just please be careful. There's not a lot of news today in the markets. Just trade careful. Follow SST Scalper Pro. There'll be updated signals throughout the day. If we see anything, we'll send it, update it. And thank you everyone for on YouTube. We appreciate you guys, and everybody in Zoom. Thank you guys. If you want to join us, www.stocksnipertrading.com gets you in the Discord with the community, all the education, the live alerts, and things like that. If you just want signals only, we have a signals only for $1 a day. We'll get you the signals, how I kind of showed you, how they're set up with a chart, trade management, and things like that. Okay, guys, enjoy your day today. Trade safe, trade smart. It's only Monday, and we'll see you guys tomorrow. Okay, have a good day. Thank you, everyone.
Hey guys, good morning, welcome to the live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra low commission, which starts at 99 cents per lot. Our account's spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HMC Greece, compliant with ESMA, EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AAAFx, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.